Ladies and gentlemen, welcome back to the real side of the markets, where we cut through the headlines and look at what actually moves the needle. Right now, as we speak, President Trump has just dropped a direct warning to Iran. No vague diplomacy, no softened language. He made it clear. If Tehran doesn't come to the table on terms the U.S. can accept, the consequences will be severe. Markets didn't wait for clarification. Silver just ripped $5 higher in a single session. Crude oil surged over 4% overnight. Geopolitical risk premium is back on the table, and it's priced in hard. Is this the spark that lights the fuse toward conflict in the Middle East within weeks? Or is it another round of brinkmanship that sends safe haven flows straight into precious metals while energy volatility shakes everything else? Today, we're breaking it all down. The Trump statement, the immediate price action, the bigger macro setup with central banks, physical supply dynamics, and what this means for anyone holding, or thinking about holding, silver and gold in this environment. Because when geopolitics collides with manipulated paper markets, the moves aren't random, they're explosive. Stick with me, let's get into it. Trump's Iran warning just lit the fuse. Silver spikes $5, oil jumps 4% in hours. Geopolitical heat is back, and safe haven plus energy risk is pricing in fast. Right now, the markets are telling the story louder than any press conference or diplomatic readout. President Trump didn't mince words this time. He laid it out plain on Truth Social and in statements. Iran needs to come to the table on nuclear terms the U.S. can live with or face severe consequences. No more endless talks without results. No more vague promises. He's backed it up with real moves. Carriers like the USS Gerald R. Ford steaming into position. Additional destroyers and troops flowing into the Gulf, even mentions of using bases like Diego Garcia if things go south. The message is unmistakable. Time is running out, and the U.S. isn't bluffing about military options if Tehran keeps pushing its program or ignores red lines. Iran's response? They've announced joint naval drills with Russia in the Sea of Oman, flexing their own deterrence while Foreign Minister talks about progress in Geneva indirect negotiations. But the gaps remain wide. No breakthrough on enrichment limits, ballistic missiles, or regional proxies. Vice President Vance came out and said, Iran ignored key U.S. demands, keeping strikes very much on the table. That's not diplomacy smoothing things over. That's escalation layered on top of escalation. And the markets? They don't wait for confirmation. They price the probability in real time. Crude oil, both WTI and Brent, ripped higher by over 4% in a single session, settling with WTI around $65 and Brent near $70 after traders piled into the risk premium. Why? Because any real conflict or even a credible threat of disruption in the Strait of Hormuz, where roughly 20% of global oil flows, sends supply fears through the roof. Iran has the capability to mine or harass shipping there. They've done drills showing it. Even a short closure or attacks on tankers would spike prices hard, and the street knows it. This isn't speculation. It's the classic geopolitical oil trade firing on all cylinders. Then there's silver. The white metal just jumped $5 in aggressive moves, part of a broader precious metals reaction, where safe haven demand collides with industrial upside. Silver's dual nature makes it explosive in setups like this. People rush in for protection against uncertainty, inflation from energy shocks, or currency debasement if things get messier. We've seen silver surge on Middle East flares before. Remember how it ripped during past Strait tensions? But this time it's amplified by the macro backdrop. Central banks are still buying gold aggressively. Paper shorts are getting squeezed on COMEX. Physical demand out of Asia remains insatiable. And now you layer on outright war risk. That $5 pop isn't random noise. It's the market saying the odds of something breaking bad just went up materially. This kind of move happens fast because the positioning was already lopsided. Before the latest Trump rhetoric intensified, metals had pulled back from recent highs on profit-taking and dollar strength expectations. Silver had dipped towards support zones around recent lows, but once the headline hit, direct warning, carrier deployments, obliteration language if red lines are crossed, buyers flooded back in. It's displacement. Stops get triggered, momentum algos pile on, and suddenly you're looking at multi-dollar daily ranges. Oil follows the same script. Risk off in equities, risk on in commodities tied to tension. What's driving the speed? First, credibility. Trump's style isn't subtle diplomacy. It's maximum pressure backed by visible force. Markets remember his first term, Soleimani strike, Abraham Accords, no endless wars, but decisive action when crossed. Second, the timing. Nuclear talks in Geneva stalled without big concessions. Iran-Russia alignment grows, proxies stay active. Third, the fragility of current supply-demand balances. Oil inventories are tight in some regions. Silver physical is chronically short versus paper claims. Any spark ignites volatility. Geopolitical heat doesn't fade quietly. When leaders talk, very bad day for the other side, when fleets reposition, when markets gap higher on headlines alone, it's not background noise, it's the main event. Safe haven flows don't ask permission, they just move. Energy risk premiums embed fast and stay until de-escalation is clear. Silver doesn't politely wait for consensus. It explodes on fear and scarcity narratives colliding. This setup has legs because the fundamentals aren't resolving anytime soon. Iran isn't folding overnight. The US isn't walking away from its demands, and the strait remains the world's most important choke point. Traders are positioning for duration, not a one-day pop, but sustained premium until clarity emerges, one way or the other. Whether it's brinkmanship that cools or the fuse burning shorter toward real conflict, the price action right now is screaming that the old complacency is over. This isn't bluff, it's the setup. When paper markets meet real-world tension in the Middle East, precious metals don't ask permission. They explode higher. Position before the next leg up. Look at what's unfolding right now. President Trump isn't whispering through back channels or leaking vague ultimatums. He's putting it out there directly. Iran has to dismantle its nuclear ambitions on America's terms, or the consequences hit hard and fast. No endless negotiations without results. No more enrichment creeping forward while talks drag on. The military buildup tells the rest of the story. Carriers repositioned, additional naval assets flowing into the Gulf, air forces on heightened alert, even talk of using forward bases like Diego Garcia if diplomacy collapses entirely. Top officials have briefed that strikes could be ready as soon as this weekend, though no final green light yet. That's not posturing for headlines. That's operational readiness, signaling the clock is ticking. Iran's side isn't folding quietly either. Supreme Leader Khamenei has rejected demands to halt enrichment outright, calling deterrent weapons, red ballistic missiles, essential and non-negotiable. They've flexed with joint naval drills alongside Russia and the Gulf of Oman, reminding everyone they can disrupt shipping if pushed. Foreign Minister Araghchi, after Geneva talks, acknowledged progress on guiding principles, but admitted major gaps remain on red lines like enrichment caps, missile programs, and proxy activities. Vice President Vance came straight out and said, Iran ignored key U.S. demands, keeping military options very much live. This isn't de-escalation. It's two sides digging in deeper, with trust at zero and miscalculation risk rising by the day. Markets react to that reality faster than any briefing room. Precious metals, especially silver, thrive in exactly this kind of environment because the setup combines classic drivers: geopolitical fear, energy shock potential, and the chronic squeeze on physical supply versus paper claims. Silver doesn't just ride safe haven waves like gold. It amplifies them with its industrial demand layer. Any prolonged tension spikes energy costs, feeds inflation expectations, and pushes manufacturers to hedge or stockpile. We've seen it before. When Strait of Hormuz risks flare, silver doesn't politely trickle higher. It gaps and runs as fear collides with scarcity narratives. The paper market side makes it even more explosive. COMEX shorts have been building for months, betting on cooldowns that never fully materialize. Physical demand from Asia, especially India and China, stays relentless. Bars and coins moving off shelves even during pullbacks. Central banks continue stacking gold, which drags silver along in sympathy. Layer on a credible US-Iran flashpoint, and those leveraged positions get squeezed hard. Stops trigger, algos chase momentum, and suddenly you're seeing multi-dollar daily swings that catch everyone off guard. This isn't manipulation conspiracy talk. It's basic supply-demand imbalance meeting outsized fear flows. Positioning matters here more than ever. Before the latest escalation rhetoric ramped up, silver had dipped into support zones after profit-taking and some dollar strength. Traders were light, complacent on the idea that talks might muddle through. Then the direct warnings hit, very traumatic outcomes for Iran, military timelines discussed openly, red lines restated without compromise. Buyers flooded back, displacing weak hands and igniting the next leg. It's not random, it's the market recalibrating odds. Brinkmanship that holds the line keeps the premium embedded. Actual conflict or even sustained harassment in the Gulf sends it parabolic. Energy ties in tight too. Oil's 4% plus surge wasn't isolated. It embedded the risk premium on potential strait disruptions, where a fifth of seaborne crude flows. Iran has shown it can mine channels, swarm tankers, or target infrastructure. Even short closures or proxy attacks would force inventories draws and spike prices further. That feeds back into metals. Higher energy means higher extraction and refining costs for silver miners, tighter margins, reduced output over time. It's a self-reinforcing loop. This setup has duration because the core drivers aren't resolving quickly. Iran won't capitulate on core sovereignty issues like enrichment overnight. The U.S. won't back off maximalist demands after repeated violations and proxy escalations. Talks in Geneva or Oman buy time, but without breakthroughs, the tension baseline rises. Military assets don't reposition overnight. They're there for leverage, and leverage only works if credibility is maintained. Precious metals, silver in particular, don't need consensus to move. They need catalysts that force repricing. Fear of war, even the credible threat, is the ultimate catalyst. It overrides Fed speak, economic data, everything. When real-world stakes collide with over-leveraged paper markets, the direction is clear, higher, often violently so. The moves we're seeing now are the early warning, displacement before the bigger impulse. Traders who wait for confirmation miss the meat of the run. Positioning ahead means riding the wave as fear builds, not chasing after it's already priced. Silver's dual role, hedge and industrial play, gives it outsized beta in these scenarios. Gold leads, but silver catches up and often overshoots on momentum. The fuse is lit, not because anyone wants war, but because the setup leaves little room for easy off-ramps. So, there you have it. The fuse is lit, the markets are moving, and the setup is as clear as it's ever been. Trump's warning to Iran isn't fading into the background. It's front and center, driving real money flows into silver, gold, and energy plays. We've seen the $5 silver spike, the 4% oil surge, the repositioning of carriers, the stalled Geneva talks, and the hardening positions on both sides. This isn't noise. It's the collision of geopolitics and manipulated paper markets, and history shows us what happens next. Precious metals don't politely wait for permission to run higher. They explode on fear, scarcity, and the realization that safe havens become necessities when the world gets this tense. Whether this de-escalates into another round of brinkmanship or escalates into something far more serious, the early movers are already positioned. The ones who wait for confirmation usually end up chasing the move instead of riding it. Silver's dual nature, industrial demand plus monetary hedge, gives it serious beta in these environments. Add in chronic physical shortages, central bank gold buying, and energy cost pressures feeding through to miners, and the path of least resistance remains higher, often violently so. If you're watching these markets, don't just watch. Act on the signals while they're still fresh. The next leg could come fast, and complacency has already cost people big in past flares. Thanks for sticking with me through the breakdown. I appreciate you being here for the real talk, no fluff, no hype. If this resonated, hit that like button so the algorithm knows to push this to more people who need to see it. Subscribe if you want these kinds of deep dives on macro, metals, and geopolitical triggers delivered straight to your feed. Drop a comment below. Are you adding silver here or waiting for a pullback? What's your read on how far this Iran situation goes? Let's get the conversation going. Your takes matter. Until next time, stay positioned, stay sharp, and I'll see you in the charts.